Good day and welcome to the third episode of our six-part series for medical students or doctors in their first year. So today we're going to discuss insurance. Long-term insurance or life insurance is what they call it. And for most people, this is like a grudge payment. They don't feel like anything's going to happen. They pay money for something that they might not benefit from. And if they do benefit, it's an unfortunate event as well. But I think you as doctors have seen the worst of life, or you've seen that life happens. We don't plan for it, but life unfortunately does happen. So these things we're going to discuss today, it won't make you rich. It's not there to make you rich, but it can definitely make you poor. It can definitely ruin your life. And we've seen that as well if you don't have these insurance in place. So you guys will obviously realize the importance of this. But there's a lot of questions regarding now, okay, you're still young. What insurance did I need? What amounts do I need? You know, which company to go for? There's some various options when you talk about insurance. So today I want to let's talk about this straight shooting. Go get to the point. I'm going to tell you what I think you should need. Like as I mentioned, I've worked with doctors, with young first year doctors for many years. So I've seen what they need and what questions they have. So hopefully I do answer most of them, but if not, please remember that you can send me a WhatsApp, a voice note, or an email at any time, and then we can discuss this in detail. But hopefully today I cover some of it. So I wrote them down in importance as well. So starting from the top, most important to might not be that important. Still important, but might not at this moment be that important because you are still young. But remember, for each person, this will also look different. Each of us are in different stages of our lives, different home circumstances at home, so it might look different for all of you as well. Okay, so first of all, medical aid. Most of you are familiar with a medical aid. There's various options out there. You can go for a smaller medical aid, say ProfMed, which is just for the professionals. That's one that's very popular. I know Discovery, obviously, that's by far the biggest one. But most known, most popular in South Africa. You get BestMed, Bonitas, you get Momentum. There's a lot of good medical aids, but we would then recommend whatever, not whatever, but what suits your needs best, right? But the main thing, important thing about just one thing about medical aid is you get hospital cover. There's two parts: hospital and then your savings. This is your day to day. So most people, young people, myself included, I actually just opt to go for a hospital cover. So you've got good hospital cover. That makes sure that when you are taken up, they call it bed and breakfast. So when you're taken up and you sleep in the hospital, say you were a big accident, you critically ill, you get taken up in the hospital. Hospital cover, good hospital cover, hospital plan will cover those expenses. But then there's certain medical aids you can choose to have that on top of your hospital cover as a savings component to it. Obviously, you pay for it, but then it's a pocket. You save money that side for your day-to-day benefits. Going to see the doctor, going to the dentist, going to the physio. There's a whole list of things that obviously you can take out of your day-to-day savings. So other people like myself, I would rather prefer just having a hospital plan, but then when I need to go and have a doctor, I have my investments, my short-term investments that I will actually then withdraw from and then pay it from that. So that's a personal preference as well, but just know that there's two components to medical cover, and it's your hospital plan and your day-to-day savings component. So that's medical aid. Then the first type of risk insurance, and you've heard of, is your income protection. It does exactly what it says, protecting your income. This is not in cases of you losing a job or retrenchment or anything like that. This is purely medically related. So if you're booked off, the doctor books you off for whatever reason, and you cannot work, you cannot earn an income, then this will protect your income. This will pay an income for you. Very important here to realize there's a 7-day waiting period, or a 30-day waiting period. So what that means is, if you are booked off for more than 7 days, this one is obviously more expensive, but if you're booked off for 7 days, then it will start paying your salary after 7 days. But for most people, because you're doctors and you will have sick leave, we can recommend, or some people can recommend, 30-day waiting period, because the first 30 days if you're booked off, you will get sick leave. Alternatively, then only the income protection will get paid out. This is linked to your salary. So if you earn a salary of 50,000, you will have an income protection of your salary amount. Right. So what it means is you earn 50,000. Now I cannot work for whatever. I've got malaria. I'm booked off for 2 to 3 months. Now this will pay out my salary for me. Okay, so that's an income protection. It protects your income for any medical related incidents. Okay, then we get to, that's a monthly payout amount. Then we get disability cover. Disability cover is a lump sum benefit. It pays off a once-off amount. So say you were in an accident and it triggers the disability cover. And normally we sit with the client and we see the affordability, but for young people, normally 1 million rand. It's enough for disability cover to cover your debt, but also to pay for changes that might be altered in your car or your home situation as well. So that's the disability cover. Then, so that's a lump sum amount that gets paid out. Then you get critical illness. Now, critical illness is a whole list of SCEDAP conditions. Most of the claims are cancer. So cancer, what makes this different from any other honor, it's not a disability, so you weren't in a car accident. It's an illness. It's also called severe illness. Some companies call it severe illness. And it's also a lump sum amount that will be paid out. Now, I'm sure that you guys have seen how many young people, it's shocking how many young people under the age of 30 are diagnosed with these severe illnesses. So normally for the doctors, we would recommend 500,000 cover up to 1 million cover, depending on affordability as well, for the severe illness. Remember, you can still have maybe like stage 1 cancer, and you can still be able to still go to work, or you're not disabled and you're not dead yet. So that's when the severe illness will pay out, and that's what makes it different from the other components as well. And then lastly, life cover. So why do a person in general need life cover? There's mainly 2 reasons why a person would need life cover. It's, first of all, to cover your debt. So if you've got debt, say 300,000 student loan debt, and you pass away, you don't want to leave that debt to someone else. So then you will have 300,000 life cover to cover your debt. And alternatively, for dependents, excuse my handwriting there, but that will be for dependents. So if you pass away, who should you look after? Do you have children? Do you have a spouse that you want to leave it to? So once again, that's very different from person to person, but that's where life cover comes in. So mostly for you as first-year doctors, life cover is not that important, depending on your circumstances. But say you've got no debt and you've got no dependents, then life cover is not really that important. Like I said, it works from most important to less important. But for a person age 40, 3 children and a spouse, very important. Life cover is then very important. So it's important to realize that different stages of your lives, various things are more important than others. So just to round that up, these 4 covers, medical aid is a bit on its own, separate, so you can have that with a certain company, Discovery, Profmed, Momentum, BestMed, whatever the case may be. But then these cover we normally bundle together at a certain company. Once again, PPS is very good with the doctors, Discovery, Momentum, Liberty, Sanlam, Old Mutual, BrightRock. There's a whole host of companies. What I can just recommend there, what I want to recommend there, is get a company that's independent. Like us, Bovis, we're an independent company. So I don't work for one of them, but we have contracts with all of them. So what we then do is say, you as a client comes, we say you want income protection, disability, critical illness, life cover. Then we say, okay, right, we're going to get quotes for you from PPS, Discovery, and Sanlam. We're going to compare the quotes, and then we're going to make a recommendation for you. All of them are good companies, but they've got various benefits. PPS, you might have heard, has got the profit share account that you build up, which is quite nice. It's like pay back a portion of your, so you pay a portion of your premium, a little bit of it will go into a pot, and it just builds up, and then later in life you can actually, it's extra money for you. Discovery works a bit differently. They've got Vitality, so you're active. If you're active and you like gymming and you work on your Vitality status, they give you annual buybacks. It's like annual buybacks that they give you. Bonuses is what they call it. And then say a company like Momentum, they have got Multiply, so they actually reward you for being healthy as well, and they give you upfront discount. So they would say you pay less for all of this. So once again, this is very personal to each of you, which company you prefer. But when you work with a wealth manager or financial advisor, I would recommend go with someone that's not linked to just one. So they cannot just sell PPS, because then obviously he's going to sell you a product and not really a solution. It should be about the solution and not about the companies. So just something to look out for. And then remember the wealth, and then make sure that the amounts, you agree with the amounts, because we in the industry get paid. So the higher the premium that the doctors pay or you pay, the higher our commission is. So that's how we earn our money. We place business with PPS. PPS pays us the commission, not you. So we don't get a cut of yours, but PPS pays us the commission. But you don't want to be over-insured as well, because what some advisors might do, they might inflate it. You pay a very big premium, I get my commission, and you never hear of me again. So that's something that just you need to be careful of in the industry, is don't let someone sell you a product and don't be over-insured. You just want to make sure that you are covered, not under-insured, but also not over-insured. So you don't pay more than you should, because that's how they get the commission. So get someone that's independent, get you 3 quotes to compare, and then you can decide which one you can go with. Which is also nice, you can have, say, a Discovery Medical Aid and PPS risk cover. So we can blend it for you. It doesn't have to be all with one company. Okay, I think I covered most of it. I know there was a mouthful. Obviously, there's lots of details under the products, which I don't want to get into now, technical details. But hopefully that just answered some of your questions. But once again, there will be more personal questions. And once again, if we sit, you can also set up a meeting with me later in the year as you approach your working year. Then we will get actual quotes for you. Oh, and when should you have this as first-year doctors? You want to set up your plan in November, December this year. Before you go on holiday in December, you want to make sure that as of from the 1st of January, you are covered. This will kick in. So I want to tell you more or less about the costs of all of this, but this will kick in from the 1st of January, and you want to make sure that you are covered as of from day one. Okay. More or less the cost. Unfortunately, medical aid is quite expensive, depending on the plan. At the moment, for my hospital plan, I'm with Momentum. I pay $1,850 for just a hospital plan. When you look at a medical aid, it will be about $2,500 up to $3,000 for one individual. This cover year, like I said, it depends on your amounts, but normally we'd say income protection, that's your salary, so that's the, say, more or less 60,000 income protection. Disability, we recommend about 1 million. Critical illness, about 500,000. Life cover, also about 1 million. because this is very cheap at the moment. If you're young, healthy, it is very cheap. Obviously, if you're a smoker, if your health is not good, this can be more expensive. There's a lot of things that might trigger this, but all of this should not be more than 1,000. This should more or less be 900, 800 Rand. I'm not sure what the cost will be next year, but this should be more or less about 800 to 1,000. So if it's a lot more than that, make sure that you're not overinsured. Maybe just check with someone else and compare it, like I said, with the different companies. Okay, that was a mouthful. Said enough. So if you have any questions, please feel free to ask them. And yeah, hopefully you've learned something today.